Hello, my name is Michael Glass from eMiniTradingCoach.com, where we focus on identifying and trading high probability trading setups. Before we begin, we want to go ahead and start with our disclosures. Any symbol that you see today should not be inferred as a trading recommendation. Any form of investing that you choose, stock, forex, futures, options, all have a level of risk associated with them. You can lose some or not all of your money. Any backtesting that we do is just to prove the probabilities of a strategy. Future results are not guaranteed. Any investment decision you make is certainly your responsibility. Trade at your own risk. So, the question is, do you see what I see? When you talk about trading strategies, it's important to look at the global vision, especially I'm a firm believer in multi-time frame agreement, but so you want to take a longer time view of the market, and then when that shorter time frame agrees with that longer time frame, you have an entry. Well, that's what pullback trading is all about. You have a long-term trend, the market pulls back short-term, when that short-term agrees with a longer-term frame, you have a trade. So we want to look at the distance, look at the longer time frame, and then take a distant view of what's close for us. We don't want to just see that short term when a downtrend. We want to make sure that we confirm these moves in the market so that we are in agreement. And that's why we have multi-time frame agreement. Long term, daily, short term, 5-minute, tick, whatever you so choose. So we are going to talk about the art of buying weakness and selling strength, the art of buying pullbacks. So first, we want to talk about why you should be buying pullbacks. Why is this such an art? Why do we want to make sure that these, why aren't we buying the highs or shorting the lows? Well, the reason we want to wait for these opportunities is first and foremost, when you think about the S&P 500 since 1989, anytime that the market has made a major move against the actual trend that it was in, the following week, it usually rises 4 times the average weekly gain. So what that is saying is the market's in a trend. It's moving in a direction. Anytime that it pulls back 3 days in a row, it typically returns in the original direction of the trend and moves higher. Typically. Now, we know that certainly a new trend could be beginning. But similarly, when the market is rising, and if you were to simply buy the high, over the next 5 trading days, you typically net 0. So you can either wait, let the market pull back 3 days, and again, ride it up as it makes new highs, or you can buy the high and sit it out. So waiting for a pullback lowers the risk of the trade, and you don't have to sit through the healthy positive pullback that most markets makes after a nice gain. So obviously, when we think about the long term and we think about daily charts, we see plenty of examples on the chart here. All the green arrows are showing healthy places to buy pullbacks. On the red arrows are showing us healthy places to sell rallies in a downtrend. But what are some ways that we can qualify, we can check the health of the pullback? One of the first things we want to make sure is that as the market's pulling back, in our statistics we talked about 3 days, we want to make sure that the pullback doesn't go beyond 50% of the initial trend. It's best for the stock to pull back to some level of support. The uptrend line, a moving average, that lowers your risk as you enter the trade. Remember, at the same time, we don't want to buy a falling knife or a rising rocket. You want to make sure it's nice and smooth. We don't want a jaggedy, because then the pullback could be still occurring, and we don't want it to be direct and quick, because again, we could be seeing a reversal of trend. We want that pullback to be 3 to 5 bars. This statistics, you can take it with a grain of salt. You want it to be a 45-degree angle. I don't really pay too much of an angle. What I do want to make sure is that they're not huge bars, making it to be a sharp to aggressive pullback. And finally, we want volume to be in our favor. We want the volume to be light as the market pulls back, and we want volume to return as we begin to go back into the original trend. So let's pull up a chart and take a look. Okay, so the first strategy we're going to talk about is basically the breakout strategy. And that is simply, as we have a beautiful uptrend here, and we make a swing high, and we're going to go ahead and mark our swing high here. right here. And so the breakout strategy is when price breaks above our swing high, we can enter the trade. Now, when it comes to breakout trades, people have different rules. Some people play the immediate breakout. Some people play the breakout and a pullback to that price level. Some people have additional confirmation. Confirmation of the breakout is another video, another conversation. The first strategy to buying a pullback is to do the breakout strategy. So as we pull back down here, we match the support level. This is a price level point of interest from previous. And as we come down now, and this is the argument for the breakout level, you don't sit through the decision, the hemming and the hammering. So the market comes here, and if you bought immediately here, you're going to sit for a few days as the market begins to hem and haw over whether or not it wants to go higher or not and continue the uptrend. And so as the market does move right along, eventually it does come up on, depending on how you do it. We know that on one of these 3 days here, we're going to get that breakout. You enter the trade, and since we're still in an uptrend, we move fine from there. So the first strategy to entering a pullback is to trade the breakout. So to review, our first strategy for how to get into pullbacks is the breakout. Identify the swing high and swing low. As the price continues towards or begins to establish a support or resistance level, let the price resume the trend, go back in the direction it was going into, an uptrend or downtrend, and when price breaks that swing high or swing low, you can now enter the trade. So the first way to trade a pullback is to trade the breakout of those swing high and swing low price levels. As this example, since we're in an uptrend, we have a swing high, and as market broke that swing high, you're in the trade. That is the first way to trade a breakout. There's another conversation about how to trade a breakout, but we're now just talking about pullbacks. But what you'll notice is that we missed out on 40 points, 12, 20, 11, 80. So how can we take advantage of that? Well, a more aggressive entry is to trade the break above the candles coming in. So you can see we have two larger candles coming into our support level established on the monthly chart. Again, I'm still on a daily time frame. So what I want to do is, as market comes up to breaking this resistance level of these two candles, we have an entry. So we can get in about 20 points sooner. Now, this particular example is even better because it gives us a resistance at this 1200 price level. So you didn't have to wait for the break of the actual candle coming in. Once we actually came in and we established these wicks as resistance, on this candle here, we had an entry into the trade, so you can get an additional 20 points. So it's more aggressive because you're not waiting for a price to truly say the uptrend is not fully confirmed yet. We still, because this could have been a double top, so it's more aggressive, and you want to position your stocks accordingly, but you get more of the move because you're not waiting for price to break out. The final point that I would like to address as far as pullbacks is identifying key price levels. So we have a down candle here, and I want to identify some key price levels to see if we've established support in this uptrend and can begin to consider buying the pullback. So a couple things to consider. Obviously, we can see in this uptrend, this green line, which is the 10 exponential moving average, was support. You can see on this particular candle what happened. As soon as it hit that exponential moving average, we had a buy. Now that's a more intraday trade. It's not a swing trade. But what does this line also match up with? You see our wicks over here? So there was definitely some validity, some support to say that this was a key price level, this 1280 price level. Also, this blue exponential, the 20 moving average, that's something else I would pay attention to, around 1268. But another way to identify key price levels is to take our daily chart, especially if we're trading intraday, and drop it down to an hourly, a 60-minute chart, and find where those swing lows and swing highs are there. So here we can see we have 1286 as a swing high level. So I would like to watch price coming into that price level. We also have 1280. That matches up with the 10 exponential moving averages that we talked about. And we also have some things going on here at this 1271, 1270 price level. So as price begins to move down into those price levels, I want to see if it's bouncing or if it's not even recognizing it. So we can see initially that our first price level wasn't even really recognized. It paused a little bit, but it's basically trading right through it. As we move a little further along, and we get down to this price level here, we can see price is beginning to bounce a little bit, but I would not be going long yet. Draw over a little bit more, and you can see the kind of in this swing low area right here is where price began to finally bounce. So what do? Well, I'm not just going to buy yet. As we talked about, I'm waiting for price to break some of these candles coming in, and these last three are basically the biggest since the beginning of the trend. So when price breaks these, that's when I would consider getting in, and of course that matches up with this little swing low right here. So that's about 1280. So when price breaks 1280, I would be interested in a trade. We did get a little bit here. We got a little pullback, but we can see that price eventually did continue higher. So to review our second strategy for getting into pullbacks, it's identifying key price levels. As the price is pulling back to a support or resistance level, look at the candles, check the momentum. If we got big candles coming in, as price breaks back through those candles, we have an entry. This allows us to enter the trade while still low risk, but it is more aggressive than the breakout trading. So let price identify the momentum, identify the candles coming into a support or resistance level, and as price breaks back up through it, even before it gets to those swing highs, swing lows, you can enter the trade. So we want to thank you for watching our video on how to buy pullbacks. You can find us on Facebook, YouTube, and Twitter, E-mini Trading Coach or E-mini Coach. To take it to the next level, we've got a free 5-video part course on how to develop high probability trading setups. You can find that at eminiTradingCoach.com/free video. Thanks, and I'll see you next time.